Good morning. This is Chris from Solstice ATR as well as Excel. You can find us on the website, Twitter, Instagram, Discord. Remember, if you like this video, hit the smash button. Give us your commentary. Share it with your friends. We use this for educational purposes. You can check, once again, the website policy on what we offer. Let's go to the next slide. The first slide, I have the S&P 500, and I've put a 4-year historical rate of return from 2021 all the way to 2023, 24. Starting the year, we had nice, down week the first week, and we had 4 weeks up on the SPX. But the most important thing, I put some of the simple stuff that you can use for your annual trading and learn how to use it correctly on long-term and short-term signals using a simple moving average, 5 and 18 at 50, 116, 200 and a 250 SMA. And we are using what we call an RSI divergence that's built by traders such as myself. And we have a momentum indicator in it as well as a compression to change the trend whenever we enter through the thermal going green to the upside, and wherever we enter through the thermal going dull green to red, the trend is down. And we use the RSI between 80 and 20 or 85 and 15. The midpoint is 50%, where usually the trend changes up or the trend changes down. We have a 61.8, a 38, and a 23, as well as 78%, but I do not mark them here, similar to a Fibonacci. On the charts from the prior year, you can see where the support is, the resistance is. F3 is 38, F5 is 50, and 61.8. At the same time, I don't mark the 78 or the extensions to the downside. We use them on a short time frame on the overall market. When the trend is up, we draw a regression uptrend channel, and we draw a downtrend channel on either the RSI divergence with a compression squeeze, which is designed for change in trend. This is a sophisticated RSI having some momentum indicators and change in trends in it. So let's go to the next slide. And the next slide I have here on a 15-minute, the E-mini micro, because I usually use the E-mini myself to trade. It's got a lot of pivot points, support and resistance, supply and demand zones, and other simple moving averages and virgin control points. So let me talk about the value area high. In the volume profile, you can see that gray area, and it's got a value area high, which is in red, a value area low, which is in green. It's labeled, and at the same time, we're the point of control where most contracts are bought and sold for the day. We can see in the prior day where the red is, where the green is in relationship to the POC. But vice versa, the monkey bars are usually alphabetized or usually numbers, and I am using the monkey bars or time spent. It has a value area high, which is in gray color, and a value area low, which is in gray color as well. And the time spent, where most of the time spent, is in yellow. If I draw a Fibonacci from low to high, and if my time spent is lower, the sentiment is lower. If my 50% Fibonacci is below the time spent, the sentiment is higher. So it is usually, we had an inside day for the last 5-6 days, but I'm showing you the prior day, which is Thursday, and the Friday trading range. We traded above, and we came back inside the prior day's range, and we closed more or less on a neutral downtrend from the prior day's close. The open is the box, the close is usually the triangle. You can see it here, and vice versa, where the open is and where the close is from the prior day is a triangle in cyan color or cyan color. So I hope this is helpful. And remember, we use different time spent in a profile in relationship to where the supply and demand zones, are we trading inside value, above value, or below value, and at the same time divergence in the RSI. Last but not least, remember where to check us out. Get in contact with us, give us your commentary. Let's go to the first slide here, and I have the S&P and the Nasdaq combined. Even if I draw a Fibonacci from this high all the way to this low, or vice versa, you can see that we basically did the same range in the following year. Even if I activate this, if I go activate and I grab this to this high, or just drag it up just to show you kind of an overall sentiment, we had the same range, but a little bit below the prior year's range. Or even if I bring it down to here, put the sentiment and I drag this one to up here, you can see that the overall range was 100% retracement in the Nasdaq 100 and the S&P combined. We had a down move in 2022, and in 2023 we had an updo. We created a cup. This is what we call a cup and a handle, and we trade either to the upside, the Fibonacci extensions, or to the downside in relationship to momentum. I will remove this Fibonacci out of the way, and what I'm going to do is talk about sector in Excel. Okay, this is the Nasdaq 100 tech sector, and you can see the prior year where the Fibonacci was. I had it. What we can do is activate it, grab this fib, put it up here. Oops, put it up here where the prior year was in the low for the year. This is the January low. And we grab this, extend it to the top to the December, we can get the extensions to the upside and downside in relationship to the overall market. If I edit the property and I want to extend it to the left, let's say I want to go back further in the charts and I want to go to 2020, I can put 2020 and the Fibonacci's migrate to the left or migrate to the right in relationship to the overall market in case we get a downtrend move or an uptrend in relationship to those extensions. It will help you understand the levels where that cup created, that flag broke out, came back. We had a down week in the first week of the year in January. Then the second week was up, third week was up, but the fourth week we had an inverted reversal hammer. Pay attention to that star, shooting star, if it's going to continue higher, or inverted hammer to continue higher or reset back to the prior year's high and fill a portion of the gap on the XLK. Let's take a look at that. I'm going to do a couple of sectors in the S&P 500. You can see those Fibonacci's. I have not set them up yet, but I wanted you to be aware of them, where you can see the volume profile, where the value area high is, the POC is in relationship to the value area low. Value high, value low, and POC is usually in purple color. You can see this is the value low, value high, and the volume profile on the charts in XLF. Let's take a look at one more XLP. You can see that the range is inside the prior year's range. We're being range bound, but we're trying to break out of the POC where most contracts are in consolidation. If we continue higher and break out, or do we fall back to the 38, then the 23, then continue higher? So we have to pay to the overall what the market is going to offer us in 2024. Plus we got election coming up in November. So we have to pay to the overall sentiment in the global market as well as the domestic market. And if I look at the XLP consumer, we did the XLP. Let's do XLU. So that way you can get a better idea. So you can see that we are in a trend down XL so I'm just giving you a couple of different ideas how to look at those levels in relationship to the overall market. We can see that the Fibonacci, I did not reset it up, but what I'll do this one together, activate the property. So we move the Fibonacci to the top to the December high, and we move this to the January low, which we have right here. This is the January, but this was the March, when the Silicon Valley Bank filed for bankruptcy and the bailout came in. So if I want to extend it back all the way to 2020 or 2019, I can. So I can see the overall market levels on those fibs and the retracement where the 61.8 or the 38% acts as support and resistance. We can see where the lows are for the 1023 and the high in December. The Fibonacci on the weekly did not grab the March, but I usually do annual high and low myself for the whole year to understand where the ranges are. Let's look at the E-mini, micro ES like we did earlier. And what I want to do in the micro ES, we can see where the most of the point of control is right here where the consolidation was. I had this little oval, we had the breakout. These are gaps in the profile in relation. I was looking for the really nice reset. We have a gap up here as well. It's never been revisited, even if it usually these gap virgin control points are usually visited in the future. We are above the prior year high and the 2022 high in relationship to that little breakout. Up here, we have a linear regression uptrend. You can see I did these manually by hand. We broke above it. Pay attention to this channel. If we break down and we lose the 5 SMA, the 18 and retrace back to this area where the F3 is and the 23% where that gap is at the 46.32, 34.36, because this is a nice gap to refill in order to continue higher, even coming back 1/3 of the move or 50% of that move between these two linear regression uptrend, which I have this channel and this channel here. You can see it's uptrending. So we pay attention to the RSI. We had a downtrend, we broke up. We're trying to make an RSI above, but if the RSI stays below this level, there's divergence here and it resets lower. This is okay coming back to the 61.8 Fibonacci. If it doesn't, pay attention to the long term. Let's go to the daily chart, and I wanted to go step by step to show you where the gap is in relationship to this breakout from before. We looked up, we retested this breakout right here, created a W. You can see this is a W formation, broke up, but we consolidated for a couple of days. We do have this uptrend channel here. If I do a channel up here, what I want everyone to pay attention to is this channel here to this point, a control point. This is a very important control point here. This is, we are in a wedge. Even if it wedges all the way up to here, look above and fail, or coming back to this backside of this wedge, that is okay. And what I want to do is pay attention to the RSI. There's divergence. We broke up, coming out of compression. Since we are coming out of compression here, I will zoom in so you can see the compression is control point 1, 2, 3, 4, 5 days coming out of compression to the upside. If this is going to continue and grind, we look for the backside of this channel. If it falls back, we look for the backside of this channel and the 18 SMA to hold in order to continue higher or lower. This is on the daily chart, and what I want to do is go intraday, and from the intraday we're going to use a 30-day range, and we're going to use a 4-hour chart. And the reason behind that, I want to know where my levels are for each week. We can see I did not mark the overnight. I took them off. We can see that there is a gap here in the profile. There's distribution here. There's distribution, a lot of point of control point. This is like a control point. This is the high and low where most of the POC is, and value high and value low. But in relationship to this, if I break it more further down on weekly basis, we can see the breakout and the breakdown. So what I want to do is zoom in here. We can see that the Monday lows was up here. You can see this was the Sunday low. You can see the date. This is on 21. If I put this marker back here, this 19, this is 21. This is the Sunday low, all the way up to this high. And what I want to do, or this high here, which we broke out of, we tested it. Remember, that was the 33 quarter. We tested it a little higher. We have a clean top now. Do we continue back down or not? We have to pay attention. So I want to get the measured move to know where my Sunday high is and my low is. So I grab this high from here all the way to the Sunday low, and I mark it. I know where my ranges are. Oops. I know where my range is. What I want to do, edit the property and make it into a gray area. And what we want to do is select the color. We're going to make it gray so we can see where the levels are in relationship to the Fibonacci extensions, to the high, the 200%, 180 to 200, and vice versa, minus 80 to 200. Is it possible coming all the way to the bottom extension? But we usually pay for the 50% ranges up or down in relationship to support and resistance if these are broken. And the 61.8 usually is a buy zone, or the 80% to 100, and vice versa on the top, reversing the levels going higher. So the sentiment is still bullish, but the RSI here is diverging a little bit lower. We are in compression on the 4-hour chart in relationship to the daily chart, where we are coming out of compression 5 dots out. So if I come now down to a 20-day 1 hour, I want to see, is my RSI getting a lower high? Yes. My RSI is below 50. Does this mean it's going to continue lower to the backside of the previous day ranges, or continue previous day high, which is here, previous day low, which is here? We can see where the marker is in the midpoint to the Friday's range. Previous day high is here. Previous day low is here, and my midpoint is here. We know that the Fibonacci is usually act as support and resistance on where my closes are. So I pay attention to the divergence in the downtrend, and we can see we came out of compression on 1, 2, 3, 4, 5, 6, 7, 8, 9, and 9 is finishing to the downside, does the 50% RSI hold in order to continue higher or continue lower to the 38.2? The most important, we trade what we see, not what we think. And let's go to the 30-minute, 10 days. And what I want to do is kind of give you a little bit more consolidation, more breakdown on each day. We can see where the volume here was very spiked up and it dropped down in the afternoon. We spiked up in volume, dropped down. You can see on Tuesday was lower volume. On Wednesday was very high volume on the move up and coming back down on the sell-off. On Thursday was an inside the prior day's range. It created an M. We got the support down here at the 48.97, 48.88. This is very important area if we end up losing the 93, 48.93 in order to continue lower, or do we get the support and we can draw an uptrend channel from here to this control point here. So if I grab a control point, which is a channel drawing, I can connect this dot with this dot. I know we are in an uptrend until we lose this one and the RSI is diverging to the downside in compression to the downside. Does this fire and continue up, or do we continue lower where the momentum indicator is telling me the thermal's gone red like it did here? Does this mean on the fast time frame I get support here at the 20 and 8 and 15 in order to bounce back up? So I'm going to pay attention to this level on the S&P 500, and I hope kind of you get a better idea how we look at things. I can give you an example in Apple. I can show you how Apple, it consolidated, broke out, created an M, fell further down. My most important thing is this control point right here and this POC. If I end up losing the 250 SMA, I'm looking for the value area low in this area where the consolidation happened before the breakout in Apple to see if it finds support or not. We trade what the charts offer us, not what we think, and we usually look where the open is, the high is, the low in relationship to the point control. Are we trading inside, above, short-term down, mid-term down, long-term down in Apple on that 30-minute chart in relationship to the previous day high and low in the volume. So we trade what we see, not what we think. And I hope this video was very helpful. And if you have any questions, please once again check us out, get in contact with us, give us your commentary, and let us know what you think. Take care.